Welcome everyone to Story Trading Weekly VIP Meetup. We got 3 tickers to talk about tonight. So let's get started. First, a quick disclaimer. Story Trading is not an investment advisor and investing in securities involves significant risk of loss. This event is being recorded. It'll be provided to our VIP members for a few days before we put it up on social media. For those of you not familiar, what's in a story trade? Story trading is a practice of understanding market pricing through the lens of the 4 pillars of fundamentals, catalyst, sentiment, and technicals. We have an app coming up. Well, first of all, right now we collaborate on WhatsApp and on Zoom in our VIP community. We have an app in private beta right now, which is the place to discover, collaborate, and validate market moving information. So make sure to sign up for that wait list at StoryTrading.com. Our VIP picks, you can track them online. There's a ton of income and ideas coming into our community. So we've had to create a new process to vet those VIP ideas. James has an update for us on Augmedix. You can see here last trade $3.83. It's 142 million market cap. The stock, since he presented his uplist to the NASDAQ, there was an offering associated with that. And he just had a conversation with the CFO on Wednesday. Here's the chart. So let's see if James can help us understand what's going on with this stock. Go ahead, James.
Hey, how's it going, Ben? So so pretty much everything before where it started trading consistently and it had that kind of gap down, that was the IPO. Before that, it was traded on the other exchange. So that's why the chart was kind of looking wonky before. Right now, they're in a period, I think it's for 30 days, to where the book runner is required to keep it around $4 to where it's trading. So I don't expect very heavy movement in the short term. The lowest I think it got to was about $3.20, and then it went up quite substantially. So that's kind of the story in the chart. It's actually more traded than I thought it would be, even for an IPO. I was a little bit surprised at that. So with respect to the company itself, I had, oh, let me turn on my camera. Sorry, I didn't know it was off. There we go.
There you go.
So with respect to the company itself, I had a few questions for them because I didn't get the chance to initially meet them. So there were still some concerns on my mind. And one of the biggest concerns that I had was, what exactly are they going to do with the offering that they had, which gives them approximately $40 million. And in the prospectus, there's language that kind of led me to believe it was going to be accelerating growth. Right now, the company has a sustainment issue. They need to get themselves to profitability and be able to sustain themselves throughout. So I was curious to see that they were actually trying to accelerate growth by making these kinds of investments. So when I asked him, he said that their goal was to do make sure that every dollar invested has a 1-to-1 in ARR, and that they are indeed just focused on using that to sustain themselves to profitability, which will bring them very close. So if they maintain what they've said that they were going to do with their growth rates, which was 30 to 45%, then that should bring them very close. Just with this offering to be able to sustain until profitability. So I was quite happy to see that. Something else that I was curious about was how their productivity model for their sales team works, because that's naturally going to accelerate their growth the fastest. And they're pretty hard set on going by what's known as the SaaS magic number. It's not something I'm overly familiar with, but it does seem to be something to where we ourselves as investors can probably predict when they're going to be adding more sales representatives. So we can have kind of a head start on figuring out if they're actually growing as fast as they said they would. Something they said on the Q3 call that I thought was rather interesting is that the majority of the medical notes that they were going to be creating were going to be the majority of them were going to be fully automated within the next 2 to 3 years. And initially, I was thinking that would reduce their operations expenditures by not, by having it automated, and it was going to require less input from people. But what they said is that is actually going to fuel their gross margins. And the reason why is because it will increase the productivity of their people and reduce their cost of service as well. So that's something that's more in line with what they've been saying, but just kind of a peeling back of the curtain a little bit. Something else I asked them about, and this was more of a risk in my eyes. In a contract that they had with Sutter Health, which is one of their largest medical healthcare enterprise accounts that they had language in there that said they would be able to choose between stateside or overseas virtual scribes. And my line of thinking was that if that was standard contract language, and if all these large healthcare enterprises wanted stateside for whatever reason, then that could present an infrastructure risk because they only have 10% stateside and 90% of their scribes are overseas. From the response that I got, it seemed to catch him a little bit off guard because I don't think he was aware of that specific provision and whether or not it correlated to other contracts. But he seemed to indicate that that was more of maintenance for the kind of first accounts that they had, because they want to keep those accounts that first went with them in good standing and make sure that they had good relationships with them. So that's something that I'll be exploring a little bit more in case he has time to review that later, just to make sure that that's not standardized in the contract language. But even so, he said that that's not really an issue, that they either don't care where the scribes are working as long as they do a good job and get it done, it's fully HIPAA compliant, or that if some enterprise doesn't accept that, then they would be willing to go overseas in the future with the scribes. Let's see, what else? The last question that I had for him was that when the notes were automated, how the qualifications for the scribes would change, because he mentioned before that it would go down. But basically, he said it takes about a month to train them now, but it would lower their typing speed requirement and increase the overall applicant pool. Some notes that I have here from things I didn't anticipate as far as questions and answers go was a couple things. One was that they may have upcoming features that are added to the product, such as a cheat sheet for the doctor at the beginning of the day when they go and make their rounds to their patients. And the second one was something I had missed actually in the Q3 call. Google is actually helping them with their go-to-market strategy through their partner program. More specifically, they're helping with sales and marketing by acting as a co-marketer. That's something that I definitely want to explore more because I was aware of the partner program, but I'm not sure exactly to what extent. Overall, just to sum it up, a lot of this information is just nice to know, but based on the Q3 results and the information that I've gleaned, everything is on track and the story remains unchanged, just with greater clarity.
Great. Thank you, James. And for those of you who want a refresher on this, you just go to youtube.com/StoryTrading and you can search for AUGX and you'll see James's initial presentation. Make sure to subscribe to our channel there as well. James, I just have a couple of questions for you. If you can clarify, what were the terms of that offering that was associated with the uplisting? How much money did they raise and what's the cash runway now?
So as far as how much money they raised, I believe it's 36 million, but if options are exercised, then it will be slightly above 40 million. And you'll have to, what was the latter part of your question?
The runway now.
I'm not familiar with that, sorry.
Meaning based on their cash burn, how much cash they have for how many quarters?
I think that this will last them probably until very close to when they become profitable. So right now, their burn rate until they become profitable, I've calculated to be about 50 million. I think the cash they have on hand is about 12 million. So with if they do get the $40 million offering, it like puts them right there. They've been smart so far about how they've been keeping their expenses low. For example, they've got an interest-only payment plan for the loans that they currently have right now. So I think a raise is possible. That was something that was expressed to me, but we don't know. It depends a lot on whether how high they hit on their growth rate and how fast they get these clinicians using their product, which I would note in this quarter, they increased their clinicians in service, which is their primary source of revenue, by 19% from 700 to 834, which is the highest they've had in 2 years. And with the current rate that they have of increasing their growth for this quarter that they have reported, they are indeed on track to hit the median of the figure that they gave between 30 and 45%. So a lot of it depends, but I do think that they will become profitable and that they, won't make dumb decisions and go bankrupt.
Okay, great. We have time for one question if there is one. So quickly raise your hand. If not, let me share my screen one more time over here. So we have the Augmedix research group available for the VIP community. You can collaborate with James over there. So thank you so much, James, for that update. We look forward to talking to you further in the room.